Hello, income investors and income harvesters. Hope you all had a wonderful holiday season and are going to have a beautiful start to the new year 2026. Wishing you all a happy new year, also happy holiday season. I'm going to talk about two ETFs which I compared in the past. That's you can see that on the screen, XPAY and SPYT. I did a video on XPAY, probably back in May or June. At that time, XPAY was a fairly new fund and it had a limited amount of history. And SPYT was more known in the market, like SPYT is from the Defiance funds. And so what happened was at that time I covered the fund briefly, and I was telling you that XPAY is going to be a contender for the target return funds, and it's going to be a straight contender for SPYT. So today I'm going to talk about these funds, compare them, and see if really XPay beat SPYT or not. So I was, predicting that probably XPay would be a great contender, strong one, and it may beat SPYT from Defiance. So now let's see if that really happened or not. And before we get there, a quick disclaimer: this video is not a financial advice or investment advice. So take it as a piece of education and for your information, and do your own research before you invest or buy any of the funds. And this is not a financial advice or recommendation. Okay, with that done, let's quickly look at the funds and understand. For people who are new, I'm going to quickly introduce the funds, and then we can do a full comparison. I'll first go through the details of SPYT, so you can get a clear idea of what it is. Um, SPYT is basically the Defiance S&P 500 income target ETF. Now, if you're not familiar with that, you have the name in front of you on the screen. Below the SPYT, you have this Defiance S&P 500 income target. Basically, it uses the S&P 500 index to buy and sell options, trade options, and to lock in some profit based on some strategy known as credit spreads. Basically, they buy one option and sell another option, and the price difference locks in as a kind of a profit. And using that, they're able to, target a certain yield. Target yield means target income, which is around 20% for this fund. And similarly, the other fund has a similar, different kind of strategy, but they also have the target of 20% yield. So you can watch one of my previous videos on SPYT to know the exact strategy. But this is basically an actively managed fund, and it trades options to give you that premium income. Okay, so that's about SPYT. But I'm going to quickly tell you what is the price. Price is around 17, $18, and the expense ratio for this fund is about 87 basis points, 0.87%. So that's the basic information we need for now. And yeah, so basically the fund sells the credit spreads. You can see here they have two different option contracts, 6905 and 6919. So they buy one option contract, they sell the other option contract, and then pocket the difference in the form of premium income. So we're not going deeper into the strategy right now. Right now, it's only the time to compare performance of the fund. So this is about the SPYT, and I'll quickly take you through XPay, and then we'll do a comparison from a third-party website. XPay is basically the S&P 500 Target 20 Managed Distribution ETF. This is from the fund known as Roundhill Investments. Okay, so basically the fund tries to generate income in the form of you know uh, trading the call options, buying the call options, and making a capital appreciation, a profit on that. So if you look at the strategy, there are three key points they mentioned here. Basically, the fund offers monthly distributions at the rate of 20% annualized. It's not guaranteed, but that's what they plan to do. And basically, they give return of capital distributions. So this is required from a tax perspective. You can consult with your accountant or tax advisor about this aspect. And so total return potential. So XPay's secondary objective is to provide exposure to the return of the index. So the main objective is to offer distribution, and the second one is to provide exposure to the index returns. So when I look at the expense ratio, it's 0.49, like compared to SPYT, it is cheaper. Like SPYT was 0.87, this is 0.49. So around 37 basis points difference. And that's significant for any investor who wants to take a initial exposure to this fund. And yeah, these funds have a fee, and some funds are expensive in terms of fee, some are cheaper. Um, okay, so that's about the fund. It will be difficult for me to go into the holdings and strategy, but the overall strategy I already explained to you. In the broad-based strategy is basically to invest in the call options, capture the upside of the index. So that's how these two funds are working. They have slightly different strategies. The Roundhill fund is trying to capture the upside by investing in the options, buying the options which will appreciate in future. Whereas the SPYT is just trying to buy an option and sell an option and capture the price difference, just like a spread. So that's why I put the picture of the spread to explain to you how it works. But Roundhill is a little different because they use multiple options, so it's basically like a loaded kind of a burger or a sandwich. So they're trying to do multiple trades to capture that upside. So let me quickly explain to you using a comparison. So this is the dividend channel where they compared the two funds to give you the apple to apple comparison of the total returns. That's what we are interested, right? So I'm going to do this, but this is not the only comparison. I have done my own analysis. I have noted my own observations. So if you're more interested in my thoughts and analysis, stay tuned till the end of this video. And if you liked what you see so far, feel free to subscribe to the channel and hit that bell icon for alerts. Okay, now let's get straight into the comparison. XPAY versus SPYT. I'm going to go to the top portion which says with dividend reinvested first, and then I'll show you the bottom portion as well so that you get the full picture. Okay, assuming you invest in these funds, the start date that you see here is the start date for XPay. So for both funds, the start date has been taken as October 31 because that's when XPay was launched. So from that point to current December 29, 2025, we see the comparison. It looks like both funds have done well and both are equally good. Like there's a slight lag on the side of SPYT. So XPay actually started with a price of 57.30. You can see that on the left side of my screen. I hope you can see that 57.30, and the ending price is 54. That is, current price is 54.34 as per this table. Now, you see both funds have depreciated slightly in terms of the net asset value. SPYT started at 1963 and fell down to 1794. So net what we see is that both funds have lost the NAV, but they have declared good amount of distributions, like $13 for XPay and $4 for SPYT. If you look at the total returns, dividend plus the capital appreciation or depreciation, whatever way you want to look at it. So if you add the distributions plus the capital, gain or loss, you get the total return, right? So the total return for XPay is 21.13, roughly 21%. And for SPYT, it is 16.3%. So SPYT is roughly, 4.8 or 5% behind XP. So this is the numbers with dividends reinvested, assuming $10,000 with dividend reinvested. This is what you will end up with. In XPay, you will end up with 12,114. You see that on the right top corner of the screen. And with SPYT, you end up with 11,632.16. You can see that here as well at the bottom of the table, ending investment. So if you start with 10K, you end up with 12,100 in XPay. And with SPYT, you end up with 11,600. So bottom line is SPYT is also doing well, Rick, and there's no doubt about that. But SPYT is slightly behind XPay. Now let's go down and look at the numbers with without dividends reinvested. You don't reinvest your dividends. What happens? Okay, now XPay, started at $10,000 October 2024 and ended up with $11,800, whereas SPYT ended up with 11,395, almost 11,400. So, you know, yeah, here you can clearly see the difference. Like SPYT is close to 12%, like 11.9, whereas XPAY is 15.47. So almost like 3.5% difference. XPAY is beating SPYT by 3.5%. The above one, it was slightly more than 4%. Now here it is above one, it was close to uh, how much was that? It was close to 4% something. But here it is like 3.5%. Still, XPay beats the SPYT. So the conclusion is clear. Like if you are looking at total returns, XPay is actually a better performer. SPYT is not that behind. It's still doing well. And you see that in both funds, there is a slight kind of NAV erosion that's happening. But one thing to keep in mind is when XPay started its fund, when XPay launched, they started at $50. That is the starting value. But over a period of time, these funds, gain or lose value depending on the size of the assets, depending on the trading and so on. But SPYT started with $20. So, you know, so SPYT has also lost a little bit of value and XPay also has lost some value. But XPay is still above its $50 initial mark. But SPYT is like below the $20 mark. So that tells you that, SPYT has been uh, a victim of NAV erosion. But we have to give some credit for SPYT because I would say some kind of benefit of doubt because it has been there for a additional period of time when there were more market downturns in the past. So that could be one reason. But in the last 1 or 2 years, the markets have been going up. So SPYT should have recovered by now, but still the fund has not recovered its value. That's something to debate. So XPay is the clear winner, and I will do my own analysis after this. Um, yeah, so that's clearly shows that XPay is winning this race. But let's look at the dividend yield that is quoted by the funds. So um, Roundhill says that the distribution rate, dividend distribution yield is 21%. SPYT actually, which is the Defiance fund says it's close to 20.88, 21%. This is just the distribution part of it. And to get the whole picture, you need to know the total returns, which is distribution plus the capital appreciation. So let me go through my calculation summary so you can get a view of both. So I did the comparison of the two. So let me zoom this to so that you can see my numbers. So I can walk you through this. Okay, I'm going to zoom it a little bit more so you can see the whole summary. I'm not going to go through the calculations, but I'm just going to go through the summary so that you get the big picture. Okay, so now we have two funds, SPYT and XPay. So I'm going to highlight the SPYT and this one in green so that you can see clearly. Okay, okay, so that's good. So the current price of these funds is, SPYT is around 1794 and XPay is 5438. So now we need to know the capital appreciation or loss. So here SPYT started at 1954 1 year ago, and XPay started at 5741 1 year ago. So here I'm doing just a 1 year, analysis. I'm not going to do all the way to the inception date. We already seen that in the other website. So this is just the 1 year performance. So now you look at the price return. SPYT lost about 8%, 8.2% in terms of the capital gain or loss. XPay lost about 5%, 5.3 to be more precise. So, so that's what I said. Like SPYT is actually eroding more in terms of the value. If you look at the dividend yield point of view, both are almost close. Like I wouldn't say that XPay is better, but because SPYT is 20.9 and this is 21. So it's almost close. So I would say it's almost equal, although XPAY is slightly on the higher side. Uh, so dividend yield wise, it's almost identical, but price return wise, XPAY is able to retain more value. So if I do the total return calculation here, let me do a quick sum here. So that would be 12.7 for SPYT and 15.7 for XPay. So that's a clear 3% difference. So I mean, for some people, 3% may not be a huge difference, but if you look at that 3% per year, if there's a 3% per year difference, and if you account that over like 5 years or 10 years, that's going to compound in a big way. That could actually make a huge difference, probably hundreds of dollars or thousands of dollars, depending on the amount you invest in. So that can make a huge difference. The total return is actually 3% higher for XPay, and it's 15.7%. So that XPay is a clear winner here. Like, how did I do this? Like, if I look at the dividends, like last 12 months, if you look at the dividends, just zooming it out so that I can show my other part of the calculations. I looked at the distributions for last 12 months. So in the last 12 months, SPYT distributed about 3.74, $3.74. XPay distributed $11.43. So all in all, like in terms of the dividend yield, SPYT is actually both are equal. Like because $3.74 on a $17.90 and 11.43 or $54.38. It's almost the same in terms of the yield. Um, in terms of the dollar, it looks like a bigger number, but the yield is the same. And I have the distributions here. I don't see much of a issue with the spiky distributions. Like they have been around 30 to 32 cents, roughly around 31, 32 on an average, except 1 month here, like they are at 28 in April 2025. Of course, the market was down at that time. Yeah. Apart from that, I don't see any issue in the spiky distributions. And so I don't see any problem with the distribution part of it. And expert distributions have also been pretty steady, like around 95 cents. A few fraction of cents up and down, but it's been pretty steady. So now you know the clear winner, like the XPay actually not only emerged as a strong contender, but it also beat SPYT. So I hope you like this video and enjoyed it. And for any updates, please feel free to subscribe to the channel and stay tuned. Thank you and happy investing, and wishing everyone a happy